again for another installment of weekly episode of whatever you guys want to talk about. Real estate, finance, whatever it is you guys want to chat about. Bring your questions down below. We'll keep today's stream hopefully within the 20-minute mark, but really depends on you guys. The more questions you have, the more you want me to answer. This time's for you guys. This is free time. So you guys ask whatever you want to ask, and I'm here to answer it. As you guys get the notification and tune into the stream, what has been going on in the week? Well, today the S&P 500 crossed over a new record all-time high, and the NASDAQ crossed over a new all-time record high. It is on the back of 10 days of constant up days. There's been no down days. Usually you have like 1 or 2 days up, 1 day down, 1 or 2 days up, 1 day down, 1 or 2 days up. You don't usually just have like a parabolic fucking rocket ship, but that is the NASDAQ right now. Crazy times we live in. It is basically the .com bubble all over again, the AI bubble, led strongly by the top 7 tech companies that now have like a $20 trillion market cap combined, which is just, if you'd have told me 2 years ago that the top 7 companies would many of them would go up 400-500% in a year and a half, I wouldn't have believed you. I would have been like, maybe revenue will go up like 20-30%. That might drive the stock to up 40%. Like that would be a bull case scenario. But things are always loftier than you expect because it's driven by human emotion. And humans are irrational, stupid creatures. And we chase the herd and we all pile in. We have fear of missing out. And so things get way more crazy than they need to get. So if you've been long the NASDAQ, congratulations. If you bought a year and a half ago, you put $1 million in the NASDAQ, it's worth $2 million. We've had 10 years of growth in like 10 months. So we're growing at like this year so far, most months, excluding April and excluding January, we were up almost 10% every single month. So 10% growth, 10% growth, just crazy amounts of growth. So anyway, that's what's going on in the market. We're going to get some news this week from Jerome Powell. Everyone who expected rate cuts hasn't got them yet. I think we're still not going to get a rate cut this week again in the US. Now in Canada, we're in a rock and a hard place. Our inflation is 7.2% annualized. Our last read was 0.6. So you gotta remember in the US, things aren't as bad as in Canada. So when I speak about Canada versus speaking about the US, obviously there's different outlooks. So in the US, I don't think they're ready for a cut yet. So I don't think we're gonna get one. It's interesting though, I would have thought that delaying the cut, and all these analysts who called for it in 2023, they said rates are coming back down in 2023, inflation's transitory. They were all wrong, all of them. It was much worse than anyone expected. And yet the stock market went straight to the moon despite everything not happening according to the bull case scenario. Perplexing to me how overvalued a lot of these companies are. I took a Tesla. Tesla hasn't had a down day in a month. It's up 50% in a month. It's trading at almost a 70 price to earnings ratio. Amazon close to 60 price to earnings ratio. Nvidia 70 price to earnings ratio. A 70 PE for the top 5 biggest companies in the world. I mean, Tesla's not top 5. Top 10 biggest companies in the world. Or even, Tesla's probably not even the top 10. I have to look up the size of Tesla. I think their market cap's probably, it's well under $1 trillion, I think. I don't know, I have to fact check that. But just wild to me that these top tech companies are trading at such lofty valuations when margins are compressing on Tesla. Revenue's not that strong compared to how fast these companies are growing. And all it takes is one incident where basically management says, hey, we're adjusting our guidelines just slightly on revenue growth. We think we're not going to grow just quite as fast as we thought, or some competitor jumps into the market, or any of those things can quickly, derail what's been happening with the growth we've seen. And the faster something goes up, the faster it can too fall with the bottom. So I don't know. Anyway, back to real estate for a bit there. What's going on in the real estate world? Real estate in Ontario has been shit. It's been really, really tough. In terms of we're seeing it's, real estate in Ontario is tough. Bankruptcies are on the rise. Small business bankruptcies are on the rise in Ontario. They're up like 500%. So we're seeing 5 times as many people going to bankruptcy. We're seeing, some crazy stuff in terms of like some companies walking away on properties. I'm hearing about deals, people calling me. People are just walking away from their properties. Things are just not selling. So for the people who need to sell right now, it is a terrible, terrible time to sell. For those buying, a good buying opportunity. Now there is still stuff moving. Stuff is still buying and selling. And valuations aren't that bad in terms of like, I honestly thought in 2022 things would get worse when things got that. Like in 2021, I thought things were getting crazy, which is why I sold my properties and then started buying again. Most of my properties, I kept a couple, but I was almost fully sold on my real estate portfolio, and it crashed like 25%. I thought we'd get a 50% correction, to be honest with you. I thought 40, 50% was the maximum we'd get before the government stepped in. However, I'm now convinced that we have maybe 5% more that we can go before government steps in. They've shown us that they will modify the rules of how people qualify. They'll make it easier to qualify. They'll step in at lower rates, which they've done. We may get another rate cut before Labor Day here in Canada. So 2 rate cuts, hopefully. Hopefully at 4 by the end of the year. A lot of analysts are calling for. So in terms of real estate, in terms of the stock market, in terms of like rate cuts affecting the two of them, it seems the stock market is impervious, especially tech. Big tech is like a safety net. People feel comfortable putting their money in big speculative mammoths that are, currently trading at, 3-4 times the multiples they were trading at 2 years ago. So it's very interesting that, you can get at the time that these big tech companies are trading at, 20 PE ratio. Meta was trading at a 9 PE ratio. It's probably like 40 now. Crazy when you look at the valuations then to now. Revenue hasn't and profit hasn't changed that much relative to the growth. Like when you see Meta go up 400 or 500% on their share price, it's not driven by 400 or 500% growth in revenue or profit. It's driven by like a small amounts of growth to those. I mean, they're still growing, but the stock price is going way faster than the fundamentals. So we're having a disconnect. Like there is growth. It's a story of growth, which is great, but they're growing like this one's growing like this. This curve's growing like this. It's a way more steepening curve than what you'd expect, which I guess in some ways is normal because things are manic, and during euphoric mania times, people hop on and drive things to levels that, they just get crazy. So no one knows where the top is. It's really, really hard to say. I would say, I saw a comment just pop up relative to what we're talking about. Do you think the top companies will always trade at a higher PE? So relatively, during a bear market, you would expect the top companies to be trading at, like a 20 PE ratio if they're like a growing, fast-growing company. 70 or 40, like the NASDAQ's got an average PE of like 40 right now. 40 years. If you hold the company 40 years at current earnings, that's assuming the technology doesn't derail their current earnings. They have to innovate at a rate fast enough to continue to capture market share as new companies come in and challenge their place in the world, right? And if you look at over time, the top 100 companies, those names shift every decade or two, typically. Apple's been one of the longest standing in the top. But like typically you would see the companies that are in the top 30 years from now aren't going to be in the top anymore. There'll be some new market entrants that'll be in the top. What that means is those top companies, they fall out from the top. That's just the way it is. It's dog-eat-dog capitalism. The top 10 companies now won't be the same top 10 companies a few years from now. Typically speaking, what you want to do is find the NVIDIAs of the world, the companies that are going to be in the top 10 that aren't now. That's the better investment than piling all your money into something that probably is going to get correct at some point in the near future. If we had any type of pullback, your NVIDIAs and your like the companies that have grown rapidly that are on full bore FOMO mode, they tend to correct harder than I think. And it's interesting because we're so concentrated, like something like 50% of the entire NASDAQ is concentrated in the top few names. And that's a sign of like fear in some ways, right? Like typically what you would see is like in 1929, in that, world depression era, all the wealth concentrated in the top names in the S&P 500 because there was so much fear that all the small stuff would collapse, right? And so maybe now there's just so much fear, but then nothing has collapsed and there's so much printed money and capital in the system, it has to go somewhere. And all these fund managers, they don't make a return selling you GICs and bonds and T-bills. They make a return on your money growing in the stock market. They get a 220 split, most of these hedge funds, right? So all this capital is driven by a 220 split, meaning they're incentivized for you to go take some risk. So for them, you go pile into equities. It's a good return for them. The interesting thing is these funds will pull out real quick to protect from downside. So what happens is when these prices get bid up to all new time highs, the fall afterwards tends to be dramatic. Very hard to predict the top though. Don't short the market, very dangerous. I'm just saying if you're gonna long the market, you better be damn sure you have a stop loss already set, like 5% from now. That's just auto sell your whole position. Because when it falls, it's gonna fall like you wouldn't believe. And that goes for Tesla, that goes for Nvidia. I think that goes probably even honestly for like Amazon, Apple. I think there's a lot of downside. I think we're way overextended. I don't know where the top is, but we're getting damn near the top. I could see typically during the first cuts, the rate cuts, the market goes down. So the cuts coming in Labor Day before the election, I could see a good 10% correction, but then it could keep going from there, right? Like even in the hardest raging bull markets, typically what you see is natural 10% pullbacks after a 30% rip up, right? Like what we saw in October, where the market crashed like 12% 1 month. That's normal. But when you grow that fast to have those corrections. April, we had another one. We had one in August last year, we had one in October, we had one in April this year where the market pulled back 8%, and then it continued to rally. Since April, we've gone up 21% of the index in like 2.5 months. So we're like double-digit growth every month, which is crazy. It is definitely way overdue. Even in the most bullish of markets, the sentiment, the market makers will allow things to fall too. They just got to strangle the shit out of the shorts. There's almost no shorts left. Any bear I talk to is washed out. They're like, I'm just sitting in cash waiting, most of the bears I talk to. So it's almost time. When everyone has given up on shorting, which is almost everyone. If you talk to anyone I talk to, any traders, they're all like, they've made 10 million % on call options on Nvidia and all these tech companies. They're all just rolling in money. The world is just, all the traders are making so much money in the bull direction. When the world is greedy, you want to be fearful. And the world's really greedy. We're in a hardcore greed index right now. And we need some fear. I think given the current market situation, we're damn close to like the bottom half being the poorest they've ever been. Like the majority of the population being fucked. And the world's celebrating because the top 10% are richer than they've ever been. Most people don't even have money to invest in the stock market. The majority of people are living paycheck to paycheck. The bottom 2/3 have barely anything. And so it's something to think about, guys. As you look at your investment portfolios, think through how this kind of could play out. What are some downside risks? And make sure you always think about those downside risks. Bum. Hey, Will, how you doing? Hey, Brandon, how you doing? Stickman Finance says, Mike, I'm starting a tax practice doing mostly corporate tax returns for owner managers. You think I could scale this? I'm a CPA. For sure you could. I think there's no reason you couldn't do that. Reach out to me. I'll be happy to give you a plug if you're looking for some people. I'm sure people are looking for tax specialists. Is 25 million net worth the new target? Yeah, like people are asking me that number. Like they're asking me a number. Like, Mike, what is that number that like is Lux Fire now? And I used to say that number was like 5 to 10 million, but inflation has run so wild that like in the last 5 years, the cost of like all the properties have doubled. The cost of food is up like 50%. To live the good life, I think you really need like 20, 25 million to really be like, I never need to really worry about money ever again. At 10 million, you can be very, very comfortable, no doubt. But I think 25 is like, after 25, I can't see any real impactful changes. But yeah, if I could have like any amount of money, I would say like more is better. But yeah, it just really like materially speaking, in terms of like, having the life that you want and, kind of having that ability to, travel and like if you have multiple kids, you want to be able to provide for those kids and pay for their education and make sure that they, in theory, don't have to work. And then I think 25 million is enough that you can have a small family office. I think that's the ideal. I think really like a small family office is the ideal optimal tax structure to set up your whole family. And like, I think that's, at that point, you can do enough good that everyone in your influence and sphere are taken care of. And so I think that's probably like the ultimate, kind of level at this point. As money inflates, that number will probably grow with inflation. But Yeah. Of course, you can live well on a lot less. Like you could live really frugally in a small house. You could house hack, buy a duplex and have it cover your living expenses, or rent hack to get your expenses really far down. And of course, you could live on like $500,000 and retire. But I think there are varying degrees of what people are looking for. And like again, the question comes down like sacrifice. Like I know some people I talk to are like, Mike, you could be a billionaire. Like why don't you? And it's like, oh, limiting beliefs. It's like, well, really limiting beliefs? I don't know. Like on one hand, whenever you do something that can catapult you to billionaire level, requires great risk. And with great risk, the majority of people fail. And so there's a sacrifice there in either in terms of like taking big risk on your capital going to zero, taking big risk on, potentially could be taking big risk on your time with your family. What are you giving up? Because every entrepreneur I know, their brain is on their business all the time. And that's a cost. Whether you waited, I could say I can go to the gym, work out whenever I want. I can go for a walk right now. I can go to the movies any day I want. I can do whatever I want. I technically don't have a set schedule. And that's really nice. That's free. But my mind is still on my people. It's still on my business. I'm always thinking of new opportunities and angles and deals. So there's a cost to that. There's a mental cost to that could have been spent doing something else. And so it's not free. Getting to the different levels of fire, it has a cost. There's a sacrifice with it. I'm going to argue that up to 25 million is totally worth it. I'd probably argue, okay, maybe not. Like for the average person who struggles, I think, to make like a couple $100,000 a year, I would say, you get to $1 million or $2 million and then it's diminishing returns. Like keep working past that. It's not really worth it unless you're leveling up your earning, unless you're parabolic in your investment of time, growing your income to scale, if that makes sense. All right, next question. Let me do some rapid fire here. Okay, I'm trying to find the spot where I was at here. Okay, found it. Hi, Mike. 3 properties. So Randy says he has 3 properties with stable market rents. Each is losing $200 a month, considering selling them, since even with the rates dropping, they're basically cash flow neutral. A lot of things go into that decision. It's hard for me to give you. I'll have to make some assumptions. Randy says you'd net 120 to 150 a property, so enough to buy 1 or 2 solid units of cash flow better. What do you think of this approach? My concern is disposing 3 units to pick up 2. Yeah, I mean, there's always ways to reallocate capital. So you're telling me that those 3 properties contain ballpark 400 grand. So you've got 400 grand in capital. That 400 grand in capital could net you, if you were private lending with that capital, $4,000 a month, typically. So if you're lending that out, it can make you about 4 grand a month in passive income. So you're giving up 4 grand a month in passive income for the opportunity to lose $600 a month on these 3 properties, $200 per property times 3 properties. So from a strictly cash flow position, like if my assumption was you're retired right now and you're on fixed income, you told me you're 60 years old and you're like, I really need fixed income right now, I would say 100% sell those properties. Pending tax obligations. I don't know what the tax situation looks like when you sell them. If you're creating losses, who cares? If there's gains there and you have to pay tax, that should be considered obviously in your decision. Maybe sell them off carefully, 1 at a time. We're not in a great life in terms of like, it's not a like 4 grand a month isn't, I mean, it is enough to live on, I guess. But if you're in a position where it's not going to game change, it's not making a big difference in your life, then like we can look that aside, right? And look at like just strictly mathematically selling now in the bottom of the market, roughly. We're not exactly the bottom of the market. We're a little off the bottom. The bottom of the market was technically December of this year was the very bottom in Ontario. So I don't know. We're like selling, now might not be the best time. We're a slight bit off the bottom, but we're way off 2022 pricing. So it's not the ideal time to sell in terms of like rates are pretty high still. Prices are not great. So you're not going to get your best value for the property. Whereas if you waited, a year and a half from now, I think rates will start to fall because we're going into an economic recession. Like GDP per capita in Ontario is shit. It's declining. We're in 2008 level GDP per capita. People are suffering here. Our economy's in the shitter. They have to cut rates in Canada. No matter what the US does, Canada's cutting rates, and they're going to keep cutting rates. Even if inflation goes to 5%, they're going to keep cutting rates. They have no choice. Canadians are suffering, and they'll need the only other option is a government federal bailout, which would like be money given to Canadians, in which case they could maintain rates higher if they stimulated the economy through other means, like federal spending. We need to see federal deficit. Like we need to see there's surpluses, no more deficits. We need to see the spending stop, and that would solve a lot of the problems. The problem is the federal government is spending like crazy, racking up debt while they're trying to get inflation under control. And when you print money and put it in the system, it creates inflation. Even if the economy is suffering, it'll still create some inflation. When you increase minimum wage, like they're doing in Ontario, to getting close to $16, almost $17 an hour now, Canadian, for like as you increase minimum wage, it just gets crazy. It pushes rents up, it pushes food up, pushes fast food prices up, pushes used cars prices, et cetera, so forth. So it's inflationary. And when you give money to the poor, they spend it. So it does directly create inflation. When you move the stock market, the wealthy people don't necessarily spend. So it's been interesting because having a strong stock market is in some ways, it is inflationary technically because people are making a lot of money in the stock market, then they have money to go spend. But typically people who have most of the money concentrated in the stock market, and those people are all really wealthy. We've had one of the strongest 2-year returns on the NASDAQ, and even the S&P 500 is at an all-time high ever. Today it cracked a new high it's never been ever. So that's putting a lot of money in the hands of the majority of the people who own the stock market are the top third of Canadians and of the US and of the developed world. It's the wealthy that concentrate on all the wealth. And the wealth transfer since 2019 before COVID is astonishingly concentrated in the top. So the top tier of society has way more wealth than they've ever had before. There's just less of them and more people on the bottom, which leads eventually to a revolution, unfortunately, like death and rallies and revolution. Sadly, is where this eventually ends if there isn't an equalization. So you have to take from the rich and give back some to the poor, because when you concentrate and steal so much wealth that people can't even manage to pay their rent and feed themselves, and you get civil unrest, right? Thankfully, the elite are investing heavily in tech, and we might all just be living in the poor might just all be living in basements with AI headsets on, escaping reality, sucked and addicted to their phone. So they don't really experience like their life. They realize that their life's just passing them by. And I don't know. That's one dystopian reality of all this. Anyway, back to I'm diverging down a rabbit hole. But those 3 properties, I guess, could you do a lot more with those properties? For sure you could. Could you redeploy those 3 properties into better 3 properties? For sure you could. You could buy stuff that cash flows positive in Ontario, wherever you are. You could go out of where you live if where you live doesn't cash flow, because there are cash flow opportunities all over the place. So yeah, there's that. In terms of how do you redeploy it? Maybe like a hybrid approach. Maybe you sell one of the properties, take 150 grand, go buy another property, the cash flow is better. That new property is cash flowing better, so it offsets the 2 that are not, and you can wait until those 2 in wherever cash flow negativeville, I don't know where they are, I just made that up. But wherever they are, then you can sell them in the next bull market. Because as rates fall, if we get 3% rates again, which we will, you've heard it here, we will see in Canada 3% handle mortgage rates in the next 24 to 36 months. I will bet the farm that we see a 3 handle on mortgage rates again. We currently are seeing we're at 4.99. There's advertised 4.99 mortgage rates again, 5-year fixed, 4.89. I'm seeing some of those promotions out right now for springtime to stimulate business. So guaranteed a 3 handle. We might even see a 2.99 again in the next 24 to 36 months. At that time, shit cash flows really well, because when money's free, everything cash flows. So at that time, you'll be able to sell that property for quite a pretty penny. As interest rates fall, real estate prices rise. It's just they're directly proportional to each other. It takes time. So as rates fall, real estate will lag behind and rise in value. It's the reason that I'm trying right now. I have a goal of acquiring $50 million in property. I'm bringing on partners. I'm raising capital. I'm doing what I have to do to acquire enough real estate that through the next bull run, I get to my 25 million net from that opportunity. So very bullish on real estate. Putting my money where my mouth is. I've never seen in history within a 5-year period after a major rate cut not seeing real estate, just rally. We're on trend. I think it's going to be a 3 handle on mortgage rates again. When it is, it'll be super bullish. So whatever you can get your hands on, if you can carry the cash flow, I don't think it's a terrible idea there. Obviously, make sure that you can carry it. Like, don't put yourself in a position where if there's any risk that you can't hold this property for 3 years, look out, because you don't want to be in a position where trying to liquidate right now is difficult, right? Yeah. Boom, boom. Next question was, it's never transitory. Most things humans will adapt to, just like taxes. It's funny. Yeah, humans are great at hedonic adaptation. Is the idea that we adapt to pretty much anything that we, whenever we experience, we adapt to it. So if you live in a mansion, everyone gets experienced and used to that lifestyle. What you find is that when you drop down in lifestyle, it's like painful. So right now people are dropping down in lifestyle, and that's extremely painful. The average person right now is suffering, and they're feeling that acute drop. They're used to having a boat, now they have to sell their boat. Used to having 2 cars, now they go down to 1 car. They're thinking about moving, they just can't because of where rates are, but Canadians are suffering. They're not going on vacations as much, all of that, right? There's pain. People picking up extra shifts to make things work. It's tough times out there right now. We're, for all intents and purposes, except for the people who longed tech and who have, like, honestly, the Canadian stock exchange is not doing well. Most of the bank stocks, everything, all that kind of stuff's down like 10% on the year. Whereas tech's up like 30-40% in a 1-year period. The heck was that? A fruit fly or something? I missed it. It's still floating around here. But anyway, go back to the thought of like how people are doing, right? It's a challenge, It's what was the question I was trying to talk about here? Let me go back to the question. Oh, transitory or something. Okay, so talking about do humans adapt and taxes. So yes, we adapt to our situation. We always want better, though. Like, Canadians always want a better situation. We never want to be in a situation where, we're not growing. So in that sense, we like to have hope. And the stock market is supposed to be 12 to 18 months forward looking. And so things actually look really good 12 to 18 months from now. Rates will be low again. Inflation will be probably back down to 2%. It's trending in that direction. So like, we don't know exactly when it's going to happen, and it took way longer than we thought to get rates down and to get inflation down, but we're starting on that track again. And so it was higher for longer, but the world doesn't care because it's going to get better. There's hope. And so the hope is driving tech right now, is like the hope that AI is going to change the world. Maybe not for the better for the average person, to be honest. A lot of us investing in NVIDIA and fueling all of that. It's like AI is not necessarily this utopian reality we think it's going to be. It might be a bit dystopian for the human race. Fuck it, everyone's just piling in anyway. And the more capital they pile into NVIDIA, the easier it is for NVIDIA to grow and to make more tech and to make that curve parabolic. Because the more capital they have, the faster they can develop this tech. So we're actually just kind of destroying ourselves as a society. I mean, it is what it is. It sucks. I kind of hope that they don't advance too fast. I actually don't like the technological advancement of AI changing the world. Maybe that's because I'm now in my 30s, so like maybe I'm getting old and crotchety, But I actually don't think that being on your phone all day, sucked into an algorithm that knows exactly what to feed you, so you can't look away from your phone. I've gotten into trances where I've been on the scroll mode on Instagram for like 2 hours before looking. It was sending me like the best business content, the best like everything I'm looking for. It just keeps sending me the best, most captivating, videos. And so I'm in a trance. It's like, wow, I'm even cognitively aware that I'm in a trance, and they still are able to lock me in. So imagine with AI how much better they're going to be at doing that, to the point where they're going to send me so much content that I don't even want to look up at my life. It's so addicting and so scary. And so there's a lot of dystopian things about that. I didn't get a cell phone until I was 18 years old. You know that? I did not get a cell phone until I was 18 years old. I waited till I was in university. I was that guy who used a landline to call people when I was like 17, 18. Even when I went to university at first, I didn't have a cell phone for the first semester. And so there's like a landline on my floor, and I would use that to call people and whatever. I had my computer, so I was like, oh, just email me. I don't know. Now I love tech. Like I worked in IT, so like I understand it. I love it. But there is something really nice about unplugging. You just turn your phone off for a while and unplug from the world. And it feels great. Go connect with nature. You know what's interesting about NVIDIA? I was reading an article that came up on my Facebook, and I clicked on it. It was talking about how all the NVIDIA talent, all the people that built NVIDIA, all like the top managers and like the best coders, all of them got share in NVIDIA, and they all have like 10, 20 million net worths now. And so all the talent in NVIDIA is thinking about just retiring and quitting. And so they're going to lose by becoming so successful. They've lost all their top talent because they made them all too rich to want to work anymore. So I don't know how well that bodes for NVIDIA. Same is probably true for all the tech companies like Meta, Tesla, all of them. What's the incentive if you get rich enough? These coders will just quit or not be as focused to deliver value, right? So that's an interesting little aside. It just came across my my desk. The more people talk about collapse, the higher the stock market goes. This is a very weird phenomenon. It's true. I've heard this to be said as well in terms of like every time we reach a new high, we tend to go even higher until we don't. There always is eventually a correction. It's just hard to call a top. In terms of like, if everyone's expecting a correction, everyone's hedging, then the correction isn't as deep. So it has to be that everyone goes YOLO long, everyone piles in the long direction. It has to be like so much FOMO. We're getting close. I don't know where the top is. Like in the dot-com bubble, I think it was like 150% up before they inevitably crashed almost all of that back down to where they were before. And it was funny. It was like almost the same thing where like Cisco overtook Microsoft for a little while as the most valuable company in the world. And it was not like NVIDIA, where they thought Cisco was going to change the world. If you guys remember in dot-com, it was a lot like the growth story was the same as NVIDIA. And they became the most valuable company in the world. And it's like we're bound to repeat all of our mistakes that we make before and probably making it again. So I'll be that guy that shorted the dot-com bubble and wiped out. I've been shorting the NASDAQ and some of the tech names like Carvana for like a year. I think one of my positions is like minus 1,000% shorting Carvana. It's crazy. I'm glad I limited my risk and put, it's become such a small bucket now that I don't even care what happens to it. I'm gonna hold it till it fucking cracks. Keep focused on real estate because that's where I have an outside edge. That's where I can actually, have a really good outsized risk adjusted alpha return. It's just I don't have that in the stock market. I have no control. I'm betting on other horses to win. It just feels like betting on horses to win. Like which management's the best, and bet on management. Bet on this company, and that's all you're doing. You're betting on other management. Why not bet on yourself? You can control what your cash flow is when you buy a deal. You underwrite the deal. There's tons of deals out there. Use your skills to unlock a guaranteed 20, 30, 40% return. Whereas I think in the stock market, there's a lot of downside and not a lot of upside. In real estate, there's a lot of upside and not a lot more downside. There's not that much more that real estate can fall in Ontario. We lost 25 to 30% in value, and the government's about ready to step in and start dropping rates and start bailing out. They've literally come out and said like Canadians' retirement is tied up in their house price, so we have to keep house prices stable. So it's good. As a real estate investor, I like to see that. It helps me understand where the floor is. I've been waiting to find out where the floor is. We knew that in 2008, took till 2011 in US and real estate, for US real estate, to bottom. So it takes 2-3 years after the rate crisis, the mortgage crisis. It takes time because real estate takes a long time for people to go through bankruptcy, through the courts, and those properties to eventually be sold. So more inventory is still piling into our market, and there aren't a lot of buyers until rates fall. And even after, for a while, people are very skittish and afraid, which is why I'm jumping in and buying so much because there's no one else competing against me. Like I go on properties, I'm the only offer, which is great. I love that. And so that's what I think this is a really good opportunity for those who are bold and willing to take risk. Don't you think top companies will always trade at higher PE ratios? So the average PE ratio is double what it was like 2 years ago. So even for those top companies. So the valuations of the top companies are trading at multiples way higher than they normally would. And so we should see that correct at some point. So we'll see. Bum, 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 bum. Hi, Michael Paul as well. Are you going to be doing residential properties or are you moving on to bigger things? Doing both. So I will probably have a fund at some point. I will buy these properties myself. Probably like if you guys want to reach out, Rosehart Capital, rosehartcapital@gmail.com, and you want to fund some of these deals, I'm going to give away the first position mortgage probably to people who want to invest. There'll be second mortgage opportunities. People want to put the down payment up. I may do an equity thing instead of a second mortgage down payment if people want a higher upside. Haven't decided how to structure it. What I don't want is 1,000 partners and 1,000 cooks in the kitchen. I've done that. I've been there. I've had like 30, 40 JV partners. I'm not redoing what I did in 2018. I don't want to deal with that again. If I had stuck with it and managed all the relationships, I would have made a couple extra $1 million, whatever. I don't want the headaches. Don't want the people to manage. I'd rather have it as debt. I can make them a guaranteed payment. There's no fighting about what the property's worth. I have full control, 100% my property. I can divvy it up. I'm probably gonna give half to my brother for running operations. So that's where I'm at in terms of how I want to grow and how I want to do it this time different than I did it last time. So I will structure it in that way. There is a play though to if I had like 50 or 100 buildings, creating some sort of fund and letting you guys invest in it that way. There's a lot of cost to opening a fund. stakeholder management. I might. We'll see. We'll see. Next question. Number of properties is less important than cash flow. I just sold triplex and thought it would hold forever, but realized the profit will never be better. Now I have capital gains problems. There you go. There's obviously a new set of problems every time. Even when you get rich, there's a whole bunch of new set of problems with taxes and managing that capital. Wherever you go, there's always more challenges and headaches. You can structure the sale of properties using seller finance, B2B, where you could sell your property, sell it to someone, and give them a 12% seller financed property. They come in with a down payment, you seller finance the rest, and you can spread your capital gain over 5 years. Some people don't know that. You can actually spread out when you pay the tax to the government. If you seller finance when you sell your property, you can choose to pay that capital gain at 20% a year. So that's spreading it out over a low tax bracket over many years. And by the way, you get $250,000 a year still personally, where it's at the old capital gains treatment for tax, where it's half tax free. So if you make $100,000 capital gain, $50,000 of it is tax free. So yeah, the other $50,000 gets taxed your marginal tax bracket. If you have no other income, that might be at 20%. The first couple thousand at 0%, but then after that 20% tax bracket, then 25, 27%. So 27% times 50 grand is like 10 grand tax. So on a $100,000 capital gain, you pay 10,000 in tax. That's an effective total tax bracket of like 9 or 10% effective tax. So capital gains are actually really not that big of a deal. So yeah. Boom, boom. How can companies retain their talent when their stock options are skyrocket? It is obviously a challenge for sure. What companies can do is they can make it vest for a longer period of time. So they have to hold those for like 2-3 years before they can use them. And so then they retain the talent for longer. So there are lots of things they can do to maintain that. Yeah. Only buy real estate if it pays you to hold it. That is my rule too. If it can't cover itself, I can't cover the debt associated to it, I don't want to own it. That said, if you're into a property now and you can say to yourself, okay, it's going to cost me $5,000 to carry this property for another year at the current negative cash flow loss, but I can sell it for 10% more, which is the likely scenario right now. And it's a $500,000 property. You can get extra $50,000 if you sell it a year from now. Probably. Would you not take $50,000 more for a $5,000 cost? That's a 10-to-1 return. So don't necessarily sell a property just because it's cash flow negative right now. Maybe you shouldn't have got into the property in the first place, probably. But you're here now and you have the property, and waiting until a better time to sell when rates are lower. And if we know rates are trending lower and we're pretty confident that like if we go into a recession and things get worse, rates go down. If we don't go into a recession and we stay like baseline, rates go down. The only scenario where rates don't go down is if the government comes in and stimulates everyone. And I don't see that passing politically, especially in Canada. So I think rates will come down. It's a pretty safe bet. But again, just be prepared that if they don't, that's why we don't have cash flow positive real estate we can hold for the long term. When should a Canadian real estate investor consider getting a corporation? Less now, even less now, because Canada has now come out and said they're going to tax all capital gains inside of a corporation at a higher rate, which is shitty. That sucks. Whereas in your personal name, you get $250,000 per year per person. All right. Thank you for deleting those comments. I just saw pop up. That was great. Someone's advertising something inappropriate. It was like some dildo or something. I didn't get to see the comment, but nasty. Will says, speaking of federal spending, I see we're shelling out more money to Ukraine. Yup, they're sending your tax dollars away rather than investing them in here in home. Their argument is they're saving the world and you're paying for it. Whether that's morally right, wrong, I don't know. We're suffering here too, so I don't know. I'm not a big fan of I'd rather just stay in our backyard and not really get involved, but again, I don't know. I honestly don't have an opinion one way or the other. I'm not educated well enough. I've heard good arguments on both sides. I've heard that, restoring global peace is good for the whole world. And so, spending that money might be overall a net driver that's positive for GDP. No one wants global war. So there can be arguments I've heard on both sides of it. Yeah. Why are mods not showing comment? What happened to free speech? I can see you right here, Crypto Hunter. So your comment obviously came through. Welcome to the chat. Bum, bum. Next question was, where would you acquire properties? For me, I'm going to look at places where I guess there's several factors, right? One is it has to make a good rent to price ratio. So the city I invest in has to have a decent rent to price ratio. And within that, I need to find opportunities to buy. So there has to be stuff to buy in that market that makes sense, right? So for me, that means I'm still finding 1% rule in a lot of the smaller cities, like, 50,000 population, 75,000 population, 100,000 population, et cetera, so forth. London less so now. I'm getting squeezed out in London lately. I'm seeing a lot of good deals in London in the same way that I used to. So for me, that's been like, Pembroke, Sarnia, smaller towns up north towards like, Northern Ontario a little bit. We just picked one up. We picked one up in Cornwall. But I like the Sarnia area. I like it mostly because number two, the second thing is like where you have a logistical advantage. So my brother lives there and we have a construction crew and I have in-house everything. And he is a partner that I can trust 100% with anything that I need. And so for me, that gives me a huge logistical advantage. And so that's why I'm buying where I'm buying. And so I could buy anywhere. And there's probably states I could buy that have better cash flow and whatnot. I had a deal come across my desk. This is crazy. In Jackson, Mississippi. And it was at $6,000 a unit. It was 100 units it was 97 units for 300 and something $1,000. Literally 7 acres of land, 100 units abandoned, needed a $2 million renovation. It was like 50 cap rate. We're talking a 5% rule a month, 10% rule a month. Just crazy numbers. But I might get shot. Just trying to work on the property, getting guys there, the risk of like somebody getting killed, you need security out front. So there's some areas where like, if I had a logistical advantage there, if I had family there or I had people I could trust there, I would underwrite and take that deal on in a second. But in real estate, if you don't execute well, you get just fucking destroyed. You can get destroyed. It's business. And so like, as an example, let's map out how I could lose on a deal like that. Well, on a deal like that, there's gangs nearby that might come in and extort the contractors, come and rip the copper out of the walls that I put in for pipes and for wiring. So there's a huge amount of risk of loss there. And you can underwrite and mitigate that risk, but it also comes down to lifestyle too. Like, do I ever want to go to Jackson? Not really. Like, I still have to live life. I want to buy properties in Florida. So I'm going to check out my properties in places I want to be. Here near my house, Sarnia's 40 minutes from my house where I live. So it's like, that logistically makes sense for me. And operational excellence is really important. And it takes a long time to build operational excellence. So you have to pick somewhere and go hard on that place, is my opinion. You got to build up at least 100, 200 units to have what I call like an edge, a logistical edge. Because if you don't have a logistical edge, if you bring in some random property manager to manage your property, they're not going to do a good job. They're going to put shit tenants in, all these kind of problems. So yeah. Yes, Andrew, that's correct. That the new capital gains tax doesn't affect you personally until you exceed 250,000 in capital gains each calendar year. So if you can slide under 250,000 per year in capital gains, so that's like 2.5 million over 10 years if you spread it out, then you'd be fine. But if you're over that, then putting it inside of a corporation makes no difference. So for the ultra wealthy, it still makes sense to put properties inside of corporations. For the average person, there's a distinct advantage to owning properties personally. What is my take on Bitcoin price? I have said that I think Bitcoin could be 50,000 or 150,000 a token, Canadian, USD, either or. I don't know. To be honest, I have no idea. There's a really good chance that next year we see Bitcoin up 50% from where it is. I think that's a really plausible scenario. I'm bullish on Bitcoin. I like Bitcoin. Would I put a lot of my net worth in it? No. I might buy a couple Bitcoins, just to like a small percentage of the net worth is what I'd recommend relative to what you have. So if you have $1 million, then putting like 50 grand or 60 grand into Bitcoin, not a big deal. If you have, 100 grand, maybe putting like 10 grand into Bitcoin would be like a maximum you want to be exposed, right? Bitcoin has real network value. It has a huge computer system. It's the first mover advantage of all the cryptocurrencies. It is the best currently because it has that first mover advantage. And there's a lot of belief behind it, a lot of power behind it. It is, I think, will remain the superior alternative, even if the technology is dated, even if it's slower, it's not as good, uses a currency. It is the digital gold, and it's become that. And it's hard, once everyone's mind's made up on something, it's really hard to change that. So for that and a number of other reasons, I think Bitcoin will be the superior cryptocurrency technology. But I make nothing from promoting Bitcoin. I think that real estate will outperform. If you are able to manage the real estate yourself, you can get a way outsized return. The problem I have with Bitcoin right now is, how do I use it to generate income for me? Like, I get there's smart contracts, I could lend it to people, but then not your keys, not your crypto. The crypto's gone into the ether. How do you collect it back? There's no court system to enforce. Like, if there was a good way to enforce, like if I could use Bitcoin to buy properties and get it back, and I was able to use the Bitcoin and get back in Bitcoin and transact in Bitcoin, but no one, you have to convert your Bitcoin to the currency you want to buy in to go do a deal. So you're not really doing any deals in Bitcoin. How do you take the Bitcoin? It's like gold. I don't like gold for the same reason. I have a tiny percentage of gold in my portfolio, like way less than Bitcoin. But I have a little bit of gold just as like a hedge, physical gold. Digital gold, that's Bitcoin, right? On a hard wallet, it's there. It can be a store of value, but how do you generate cash flow from it? It's not a business. There's no one to invest in. What do you do with it? You just hold it and hope that it goes up in value? That's the play behind it. So am I bullish on it? Yeah. Am I going to put the whole net worth in it? No. I need to generate passive income to live on. I can't be put it all in Bitcoin. So if I believe cash is worthless, I would just buy land. I'd buy copper. I'd buy commodities. I'd buy all of these things, right? There are plenty of other scenarios. In a doomsday scenario, guns, food, water, copper, other commodities and stores of value are way better than Bitcoin. And in a real apocalyptic scenario where cash has no value, Bitcoin is fucking worthless. You get shot in the head, your Bitcoin's gone. They just take it out of your pocket. It's worth nothing. It's in a hard wallet. No one can access it. It's there are challenges still with Bitcoin, and I am by no means an expert. I don't study the topic. I can't even profess to be an expert by any means. If you go read up some of the great critiques of why we will never be on a full Bitcoin standard, you can learn and be educated on it. I still like Bitcoin. I think there's a chance that it becomes the new gold. It's a great, potential into the future with AI, where you could securely, with AI, it also has danger where you can break a wallet pretty quick. And I think the problem is with Bitcoin, most people are retarded, dumb, silly. They make bad decisions. I know so many people that I went to school with who will lose their crypto passwords, who would, like people who I know who lose the money in their bank accounts would call and try to get money back from the bank. They need that protection that a bank can afford them. And so there's challenges, I think, with saying that people can be self-custodians of their own money. I don't know. Most people can't be trusted to manage their own finances. They can't be trusted to store their own Bitcoin. I know lots of people who have forgotten their codes. Like, oh, I had a Bitcoin on this wallet and I forgot the password. Like, fuck, I can't get access to it. Like, that never happens with physical gold. That never happens with like your cash in your bank account. You can't forget the password and be locked out of it forever. There are real issues. There are issues with generating cash flow from it. It's how? If I have $1 million in real estate, I can go rent that land out, and that land will pay me $100,000 a year, and the land will go up and beat inflation. Land will hold its value forever. If I buy a little bit of land all over the world, that land can be rented out, generating cash flow for me. It's an inflation hedge. I would much rather have land as opposed to Bitcoin. But I see the utility in a world-ending event to have some Bitcoin. So I have some. People who are smarter than me love Bitcoin. For those people I know that love Bitcoin, I buy a little bit. I'm like, you know what? I trust this person's really smart. I'm gonna buy a little bit. I'm gonna hedge my bets in case I'm wrong. But I'm not gonna put all my money in Bitcoin. I don't know the answer to that. I wish I did, guys. Depends on investing strategy. Someone says. Headache adjustments. Yep, really important. All right, guys. Those are all the questions, I think. Sweet. All right, it's been a great show. I don't know if CBDC will be built on Bitcoin. They may do their own central bank digital currency that is built on some other network. We actually don't know. So it would make sense they put it on their own ledger so they can restrict our accounts whenever they want to the central bank digital currency. And when they roll it out, this new central bank digital currency, they'll say anyone using Bitcoin is, obviously a criminal. Because why wouldn't you use the one that's approved by us? Why would you want to use one that's a black market one that you have control over? So it's, it'll be interesting to see how the world, I'm scared for when society no longer operates in cash. I love cash. Whenever possible, I go and take cash out and I pay in cash just because I believe, fuck the government. I like that people have a choice to do what they want with their money. I like that, the bank can't put fees on it. Like when you use a credit card, 2% of every transaction goes back to the credit card companies and the finance companies. A lot of us grassroots folks love to use cash and to pay in cash. It's easy, it's simple. I'm not trying to connect to the Wi-Fi. My phone doesn't have signal right here where I'm with someone trying to buy something off Kijiji or Marketplace. Cash, I like. When I'm meeting someone face-to-face to do a transaction, I like cash. Versus I've actually bought and sold some stuff with Bitcoin before, and it was a pain in my ass. I went and bought some graphics cards for one of my rigs, and it was a pain in the ass. We're waiting like 20 minutes for it to settle. It was, it's funny now because I look back, I bought a graphics card for $18,000 in Bitcoin today. When you convert the value of the Bitcoin, I think when I was buying that graphics card, Bitcoin was like fucking $25,000 a token, and it got up to 100,000 Canadian a token. So it went 4x. I paid like $4 grand for this graphics card in Bitcoin. And it became like, now it's like 4 times, $4,500, whatever that is, like 18 grand almost. That's crazy. Like, that kills me inside to think that like the speculative swings of the currency, you can't spend something that moves like that. When it's stable, then you can use it as a currency. You can't use something like that as a currency when it moves like that. It's fucked. It doesn't even move relative to money supply. Like it'd be up like 80%, down like 20% for no reason. It's not even correlated to money supply. Bitcoin just trades like a tech stock, like a penny stock. It's funny that like I used to refer to a penny stock as like an involatile junk bond that trades like the wind. But now the big tech trades 10%, 20% in a week. Like it trades like junk bonds. That's the sign of a euphoric bubble. We're getting real close. The volatility is just insane, which is weird because the VIX is trading at like the most stable, safe level it's been at in a long time. Anyway, been a good stream, guys. Thanks everyone for tuning in. Appreciate all of you guys' comments and questions. And if you enjoyed the stream, please give it a thumbs up, like. I'll see you in the comments. And of course, find me on social media at Mike Rosehart. Let's connect. Let's chat some more, obviously. And if you got value from this video, please share it around somewhere. It would mean the world. Remember, secrets unlocking wealth through you. 3 levers and control your financial future. Spend less, earn more, and maximize returns in the difference. That's it. Those are the 3 levers. Bye, guys. See you next week.